If the stock market crashed 50% tomorrow, I would get excited. Today, I'm going to walk through why I welcome stock market crashes. I see them as an incredible opportunity and not something to fear. Starting out today with every crash feels different, at least a little bit different. Look at history. 2008, the financial system, it's collapsing. 2020, we all know what happened there. COVID happened. The world is shutting down, the economy, it's going to stop. It's all going to end. 2022, we had a bunch of stimulus back in 2020. Huge inflation hitting in 2022. Fed had the rate hikes, crazy. Oh, this time's different, right? 2023, the banking system, it's failing. It's over. A couple banks went under. This time's different. 2025, what happened? Whether you like the guy or not, Trump put on a bunch of tariffs. Oh, tariffs, they're going to destroy the economy. It's all over. Every single time, it may be a different headline, but the same Wall Street fear and emotion. It's always there, just comes in a different form. But getting into the real meat of this is the foundation here. Great businesses go on sale in a market crash without fail. Look here. This is the 2022 market crash. What were the PE ratios of these incredible companies in 2021 before this crash? Well, Meta went from a forward PE of 25 down to 11. More than cut in half. Alphabet, so Google, 30 to 17. Microsoft, 38 to 23. Apple, 31 to 21. Amazon went down. Nvidia, Tesla all went down meaningfully. But the question here, was Microsoft still Microsoft? Was there a fundamental change here? Was Apple still Apple? Were they selling phones all the time, left and right, selling phones? Did people want the new iPhone coming out? Was Google still Google? Were people still going online, searching, Googling? Were they still watching YouTube? Google owns YouTube. I think they were. So the quality of the businesses did not change. Was there one year, maybe a couple quarters of slowing growth or negative growth? Yes, but what changed is the price of investors were willing to pay for the actual business. That is what changed. Now, this is why this slide right here is so important, why running your numbers is so important. Not every company is the best buy. I'll say that again. Not every company is the best buy. Just because all these companies crash does not mean they're all equal opportunities. That's very important to keep in mind. This is why it's important to run your numbers. What do I always say? Project out the earnings for these companies. Where's the revenue going in 3 to 5 years? Where's the net income going on average? What's the EPS going to be looking like in the future? And then what is a respectable PE ratio to place on that growth in the future? So what do? This is Google, and this is Google right now. I just put it in here as an example. Keep in mind, Google is spending aggressively on AI infrastructure, so their net income isn't looking great compared to their revenue, but 15% revenue growth, 12% net income growth, basic EPS is $14.23, and this is for a base year of 2026, what they're projected. Plug it into my base case here. 12% net income. If they're growing on average 12% net income the next 3 to 5 years, I think a 25 PE is respectable for that. So they have about a 12% base case, which is a little bit higher than the market, maybe right around it. So I'd say fairly valued. But this is why it's important to go in here, run your own numbers. Yours are going to be different than mine. Go in here, run your numbers, run a bear case, run a bull case, run what you think is going to happen, and then make an informed decision on which companies you believe are the actual best opportunities during these downturns. Now, You might be saying, well, what is the process here that I go through when I'm in a crash? How do I know what the best businesses are or something I even want to invest in? Well, here's my checklist. First here, has the business fundamentally changed? Let's take Meta as an example in 2022. Yes, revenue, net income got hit for a few quarters a year, but did the business actually change? Were people like, you know what, Instagram, it's good, but I'm just going to not use it anymore. Facebook, I'm just going to delete it. I'm not going to post anymore. I'm not going to be on the app anymore. Absolutely not. There was no fundamental change in the business model. But investors, Wall Street was not willing to pay the PE they used to for a short time. So I checked the box. Is top line likely to recover in the future? This is just a fancy way of saying, what's the revenue going to be like in the future? Is revenue going to reaccelerate, start going up again and accelerate into the future? If it is, check the box. Is bottom line likely to recover in the future? Another fancy way of just saying net income. What's the company actually bringing in? So after expenses, everything like that, what do they actually keep? Is that going to grow and accelerate again into the future? If it is, I check the box. Has the valuation become attractive? So this goes straight back to, what are my projections? I run them. Is this attractive? If yes, check the box. If no, then I don't touch it. Last up here, am I excited about the business over the next 5 years? This one may be more important than anything. This isn't about numbers or anything like that. Am I excited to own this business 5 years into the future? Will I look 5 years in the future and be like, that's a business that's still growing revenue. They're still bringing on more and more people or selling more. If I'm not excited about the business, I don't check the box and that's it. But if all 5 of these are yes, I personally see an opportunity, not a crisis. So this brings me to my last slide here. Market crashes don't create wealth. This is something to keep in mind. I put up here all the little crashes here or major ones. These are all the crashes I talked about at the start: the financial crisis, COVID, inflation, bank failure, tariffs, all of these that happen. Yes, these crashes, a lot of people lost a lot of money. They destroy wealth. They do not create wealth, but they create incredible opportunities for the disciplined investor. The disciplined investor. And keep in mind, this star down here on the bottom right, some companies were down 50, 60, 70, 80%. Just because the market as a whole, this is the S&P right here, maybe down 20, 30, 40%. Some of these companies down 70, 80%. Think of Meta. In 2022, Shopify down 80%. Some of these companies just get destroyed. Are they going away? No. So be disciplined, run your numbers. Your numbers are going to be much different than mine, or maybe similar. That's on you. And then find companies that you see a great future with and make your own informed, intelligent decision here. And be disciplined with that. So that's all I got for you today. If you found something helpful in this video, I'd love a little like button. If you like this content, find it interesting, feel free to subscribe, and I'll see you guys in the next one.